We've seen Fidelity come out with a price target, hold on to your hat, of $1 billion. $1 billion. The fifth largest asset manager in the world is saying by the year 2050, Bitcoin could be worth $1 billion US dollars. Not in today's dollars, in 2050 dollars, which means your house is worth, I don't know, 10 million, even if you just own it right now and it's worth 500,000, but not even, I mean, 500,000 is a lot of money. But the point is, these are the type of research that gets people thinking. And yeah, so Bitcoin today is a better risk-adjusted investment than it was when I first got involved at under 1,000 US dollars per Bitcoin. And that's how you got to change your investment guidelines or philosophy as the information changes.
The fifth largest asset manager in the world, Fidelity, just came out and predicted that Bitcoin by 2050, in just 25 years' time, could hit $1 billion per coin. That would represent a 20,000x increase from today's prices. This was revealed in the latest interview by Greg Foss. Greg Foss isn't just talking the talk, he's got over 35 years of experience in finance to back it up. In his latest interview, he highlighted how institutions like Fidelity are leading the way in recognizing Bitcoin's potential, which will cause others to follow suit. If his 35 years of experience in finance taught Greg anything, it was that the fiat system in which we constantly print money and inflate the dollar is a complete Ponzi scheme. The solution? Bitcoin. Make sure to stick around to the end of the video where Greg breaks down why he believes that in 2024, Bitcoin represents the best risk to reward investment he has ever seen in his career. Also guys, if you want to stay most up to date on the crypto world, I send out a daily 5-minute crypto newsletter that covers expert predictions, on-chain data breakdowns, and breaking news, all for free. Click the first link in the description, enter your email, and join over 50,000 others to become a better crypto investor right now. Now here's why Greg Foss has never been more bullish on Bitcoin.
I maintain that owning 0 Bitcoin is far more risky than having a proper portfolio allocation. And by my definition, a proper portfolio allocation for everybody is 5%. Start between 0 and 5%, but don't be at 0. Get, up to 5%. And then once you've done the homework and understand what Bitcoin is from a technology standpoint, as well as a monetary store of value, you'll get more comfortable moving up. But while I don't frown on people who are such Bitcoin maxis that they are 100% committed to this asset class, I'm not because I don't believe that the asymmetry to the upside is so beautiful, just that I don't manage risk by going all in on anything. I never have. And the beautiful thing here is, Brandon, you don't actually need to own a large position of Bitcoin in your portfolio to participate in this asymmetric investment of a lifetime. So in other words, having a 5% position in something that goes up 100-fold in value, all of a sudden, everything else being equal, you are now at 99% Bitcoin. You haven't sold any, but you're 5 times as wealthy as you were just holding a 2% allocation. Goes up 100 times. Excuse me, I used it. What did I use? 5% 100 times. It goes up 500%. So 5 times. Point is, man, oh man. Now, do you have the discipline to hold? So 2 things. First of all, a lot of people in the Fiat TradFi world are paid not to understand Bitcoin, which is to say, basically, they don't want it to succeed. They view it as a threat to, and rightly so, viewed as a threat to their TradFi business. The Bitcoin will disintermediate everything. So if you're Jamie Dimon, you're paid not to want it to succeed, and therefore, whether you actually have gone deep down the rabbit hole or not, the easy out is just to say, it's a fraud and everything that he does say. So that's a structural problem. The reality is that it's slowly, and not just slowly, quite aggressively happening. And soon it'll be too much for everyone to ignore. So I bring out the example of just last week where BlackRock, the world's largest asset manager, announced Bitcoin allocation within their global, I think it's called the Global Strategies Fund or their Global Asset Fund or whatever. But, nonetheless, it is a allocation to a new asset class for diversification benefits, as well as, I like to think of it as, insurance against the fiat Ponzi. As BlackRock does it and Fidelity's already doing it, you're likely to see other big asset managers do it, which means that pension sponsors and whatnot will also have to make a decision. So, your kind introduction of me is that I have 35 years of experience. That is true. I have 35 years of experience making mistakes. Okay. And making mistakes includes, thumbing your nose, or just basically sloughing off a new technology or a new entrant into the square, whether it's a technology like the internet, the very intelligent Nobel Prize winning Paul Krugman basically said that the impact of the internet will be somewhere around the impact of a fax machine. Okay, I mean, there you go, a guy who at the time had a big reputation, but clearly a small brain. And this is just, you see it time and time again. So I'm able to say I've seen these types of things over 35 years. My mistake was, not embracing some of these asymmetric opportunities when I was presented with them. You're only presented with a few asymmetric investment opportunities in your lifetime. And if you continue to let them, slide away, then you're going to be, you will not have managed your risk profile properly. But more frustrating is that you had the chance to do the homework and you chose to take the soft way out. Long answer to your question, but it's pretty explainable by me having compatriots and former business partners who, they laugh and they say, oh yeah, this Bitcoin thing. And the truth is, they're the ones living in the Ponzi. The fiat system is the Ponzi, and Bitcoin is the solution. But it takes, hundreds of hours, if not thousands of hours of homework. And, some people are more easy to convince than others. Predominantly the people that are easy to convince, and I'll wrap the answer up this way, are those who don't realize yet that they're paid not to understand Bitcoin. So eventually most people are paid not to understand Bitcoin because their fiat job depends on them not understanding Bitcoin. But over time, the young kids, they're not, they have a wider lens. And the old guys will be either thrown out to pasture or disintermediated, and that'll be unfortunate that they didn't do their homework. Well, I think he's doing a horrible job. So let's get that out of the way. I think he's managing this like a bit of a drunk driving a clown car. Because what has he done? Well, he's sort of like at the original outset of this clown car escapade. He says, we're not even thinking about raising interest rates. Okay, well, hey, knucklehead, you should have been thinking about raising rates because you waited too long to think about raising rates. And then you got way behind the 8 ball. And then when he's behind the 8 ball, he's decided that he's going to raise rates the fastest of any central bank, Fed central banker in the last 4 decades. Okay. So the rate of the pace of rate increases is the fastest of any other tightening cycle. And that's dangerous because there's typically a 12-month lag in, policy, monetary policy, and the economy, and we haven't even seen reality. We haven't even seen the impacts of the rates going from, let's say, 3 to 3.75, let alone where they currently are at 4 3/8. It's not a good situation because things tend to break. Everybody's, you get the pundits on TV that are already applauding the Fed for threading this needle. It's not even close that they've threaded the needle yet. Now, it is possible that they do it, but I actually think it's highly unlikely because of this lag monetary policy. And then, the reality that this system is way over levered. It always, the successive financial crises always happen faster and the unwind is more painful, the deleveraging. So, way too early to declare victory by the Fed. Remember that inflation compounds, like everyone's celebrating that it's come down to 6.5%. But guys, going from 8% to 6.5% means it's a 14% annualized inflation rate over the last start to finish. That's not that good. Okay. And then you could go 8%, 6.5%, 4%, 3%, 1%, negative 4%, and you're still at something like a 5% annualized inflation rate. Why? Because the first 8% is compounded all the way through the next periods. Okay. So this is part of the mathematics that people don't understand as well. So it's just so simple in my mind that if you actually took and paid attention to your grade 11 mathematics courses, you would see through this charade that the Fed is trying to accomplish. It doesn't matter because fiat debasement is assured. It's a certainty, and you need to hedge that certainty. If you do it with other hard assets besides Bitcoin, that's better than owning soft assets like bonds, where, yeah, I'm a hero. I invested in US 10-year treasuries at a 3.5% yield. I held it for 10 years, but the $100 I initially invested at time zero is now got $65 of purchasing power. So, I mean, like, you got to understand it, but you got to look at it both ways. So yeah, own hard assets, and companies need to manage their exposure similar to individuals. And then countries need to manage their exposure similar to companies, similar to individuals, which is to say, you see on the company side, you'll see a MicroStrategy, then you saw Tesla, but not really the adoption that we thought would happen yet. But it's still so early, and maybe people learn when they see a BlackRock. I think this is my second podcast today. Did I mention to you on your podcast that BlackRock had made an allocation to their fund? Okay, good. Like, you see these things, and slowly, then suddenly, right? I'm in Boston right now. Even though I'm a Canadian, I'm down in Boston because we're having a Boston meetup, celebrating a great group of Bitcoiners in this town, but also Jason Lowry, who's a U.S. Space Force, soon to be a native of Florida, or a citizen of, or not a citizen, I guess, or just living there, neighbor in Florida of yours. He's going to go work at Cape Canaveral. He is trying to orange pill the Department of Defense, and argues that Bitcoin would be exactly what you're saying, where countries need to hold it as a store of value to stabilize their fiat currencies and also defend themselves against other countries that are going to win this race. So Jason last night was giving, this is Jason Lowry, is giving some really cool stories about, some of his war, when I say war, like soft war thesis, where, he thinks that Russia and China have already stockpiled a meaningful amount of Bitcoin, and they're allowing the U.S. to fumble the ball in order to assure that the U.S. won't be a challenge to their holdings of Bitcoin. And it's like gold. Both of those countries are stockpiling a bunch of gold, and all for the same reasons, because they don't want to hold U.S. treasuries as a store of value, because that is a bad risk management decision, much like it is, in my opinion, for small investors to hold too many bonds or fixed income instruments where your principal value is debased because of the debasing currency. So whether it's going to be a country like El Salvador leading to a bigger South American country like potentially Brazil, leading to a bigger BRIC like Russia, and more important BRIC, I guess I should say, because of the petroleum exports. But imagine if Putin turns around and someday says, yeah, you know what, I'm going to start pricing oil in Bitcoin. And that's brilliant from my perspective as an engineer. I can see, why would you sell your valuable natural resource energy for, debasing fiat dollars when you could sell it for the equivalent of digital energy or Bitcoin? These things happen. They happen slowly, then suddenly, but Bitcoin still is only 14 years old. So coming back to my risk hat, I've been doing this for over 30 years, and Bitcoin has only existed for, just over more than 50% of my career, but really like 1/3 of my risk management career, because I didn't take Bitcoin seriously in 2009, 2010. I did some research on it. Luckily, I never closed the door on it entirely. But the reality is Bitcoin is just now getting to be a big enough asset class as in itself for more big money to get interested in it. You can't own all the Bitcoin at $2 US per Bitcoin and then you own it all, and then it doesn't do anything because you own it all. Like, you have to wait for it to get dispersed around the globe, allow it to create the network effects that are making it so exciting. Yeah, you're getting rid of the people that are in as a tourist, okay? You're getting rid of the Bitcoin tourists, and you have the real Bitcoin population who are dedicated, who are testing their thesis, right? Making sure they're not wrong. So they look at it, they test the thesis, they say, okay, you know what? It's other people who are selling that are wrong. My thesis is still correct. And you just try not to get too fancy and pretend you can predict where the next $5,000 price move goes. If you look at it to the context of, here, I'll summarize it this way. I first got involved in Bitcoin in 2016 after, originally thinking it was the Ponzi, until I eventually did some true research in it and realized, oh my God, it's the solution to the fiat system. So I get involved in 2016. It's $800 US per Bitcoin. I can look you right in the eyes and your listeners right in the eyes and say this categorically right now: Bitcoin is a better investment at 16, or call it $20,000 US today than it was when I first got involved in 2016. So 6 years ago. Okay. Why is that the case? Well, we've seen central bank reactions to things like COVID. We have seen adoption of Bitcoin continue in countries like El Salvador and, most excitingly, Africa. We have seen education. We've seen the blockchain TikTok next block. We've seen the security of the system increase. We've seen Fidelity come out with a price target, hold on to your hat, of $1 billion. $1 billion. The 5th largest asset manager in the world is saying by the year 2050, Bitcoin could be worth $1 billion US dollars. Not in today's dollars, in 2050 dollars, which means your house is worth, I don't know, 10 million, even if you just own it right now and it's worth 500,000, but not even, 500,000 is a lot of money. But the point is, these are the type of research that gets people thinking. And so Bitcoin today is a better risk-adjusted investment than it was when I first got involved at under 1,000 US dollars per Bitcoin. And that's how you got to change your investment guidelines or philosophy as the information changes.
So there's Greg Foss with his over 3 decades of expertise in the finance world, offering a compelling perspective on how Bitcoin could not only challenge but possibly replace our current finance system by 2050. Remember, the predictions we've discussed today are not just about staggering numbers, they're about a fundamental shift in how we perceive value, currency, and investment. As institutions like Fidelity throw their weight behind Bitcoin, it's clear that the crypto landscape is on the cusp of monumental change. Before we wrap up, let's not forget Greg's powerful message. In a world where traditional financial systems show sign of strain under the weight of incessant money printing, Bitcoin stands out as a beacon of stability and potential. His belief in Bitcoin as the best risk-to-reward investment he's ever seen underscores the importance of looking beyond the present into a future where digital currencies play a pivotal role. We hope this video has provided you with valuable insights and sparked your curiosity about the future of finance. If you're keen on staying ahead in the crypto game, don't forget to sign up for our daily 5-minute crypto newsletter. It's your one-stop shop for expert predictions, on-chain data analysis, and the latest news in the crypto world. Join over 50,000 like-minded individuals by clicking the first link in the description and entering your email. Anyway guys, hope you all enjoyed today's video and that provided you with some value. I'll see you all in the next one, and as always, all the best.